Hello and welcome to A-Team Group's ESG Insight Briefing Virtual 2021. We would like to thank our sponsors Solidatus, Six and Adenza, formerly Axiom SL, and our media partners, the Professional Risk Managers International Association and the EDM Council. You can connect with your peers on the networking page, and if you have questions for the speakers, please use the panel to the right of the video. As well as welcoming you to our ESG briefing, we are thrilled to tell you about a brand new channel we are launching on our website called ESG Insight, where we'll provide content and commentary as the industry develops approaches and solutions to managing data, regulations and reporting for ESG. As you are interested in ESG, we'll be sure to send you our launch newsletter, which is coming out on Thursday. Meantime, thank you for joining us today, and I hope you enjoy the briefing.
Welcome everyone to this A-Team Insight briefing. The topic today, ESG data management, a strategic imperative. My name is Andrew Delaney. I'm Chief Content Officer at A-Team Group, and I'll be hosting today's session. We've got a lot of great content for you today. This briefing is going to explore the challenges around assembling and evaluating ESG data for reporting. It's going to look at the role of new technologies and alternative data in improving data insights and filling gaps. And it's going to explore the impact of regulatory measures and industry collaboration on transparency and standardization. As usual, we are doing this with the help of a group of experts from across the financial markets industry. I would like to thank them for their expertise and insight, and of course for their generosity in taking the time to join us today. Let me briefly go over the agenda for today's session. We're going to start off with a Keynote Fireside chat, complete with two fireplaces, which will explore why ESG is a strategic imperative for financial institutions. This will be followed by two panel sessions. The first, just after 10 o'clock, 10:05, looking at ESG data and challenges around reporting. And the second session at 10:50 is focused on leveraging data science, AI, NLP, and machine learning for improved insight. Before we get going with the sessions, a couple of housekeeping points. First of all, as usual, I would urge you to visit the networking and sponsors section so you can connect with sponsors and find out how they can help you. Just to remind everyone, it's their support that makes these events possible. So please do connect with them, as this will make them more likely to support future events, and of course bringing you even more valuable content. Through this networking section, you can also see who else is attending and network with peers and colleagues, contacts, and so on. Make new contacts. We also encourage you to get involved by voting in audience polls and asking questions during the sessions. For this, we will use the Slido facility. I'm sure most of you are familiar with that. You can connect to Slido on the right, through the facility on the right of this video screen. The code for today's event is #ESG briefing. Finally, before we get on with the show, let me just update you on a few of A-Team's ESG related activities. As mentioned in the opening video, we are thrilled to be launching a brand new channel dedicated to the topic on our A-Team Insight website. It's called, surprise, surprise, ESG Insight. And through this channel, we'll be providing insight, commentary as the industry develops. We'll be looking at approaches and solutions to managing data, emerging regulations, and all those all important reporting requirements and how to meet them. As people who are interested in ESG content, you as delegates today will be receiving our launch newsletter, which was coming out this Thursday, so look for that in your mailboxes then. A couple of other bits around ESG. We have a new ESG handbook available that is available as a free download from the A-Team website. So again, please do go and check that out. Okay, so without further ado, let's get back to today's session. To start us off, I caught up with Dr. Kay Swinburne, who is Vice Chair of Financial Services at KPMG. And I sat down with Kate to get some insight on the evolving ESG landscape and to find out why ESG is a strategic imperative that financial institutions need to act on now. So let's go to that now. Welcome, Kay, and thanks for joining us. ESG investing is one of the hottest trends impacting financial markets, and innovation is moving at a rapid pace, but the market infrastructure is still underdeveloped, and ESG data is facing scrutiny from both investors and from regulators. We're going to explore some of the drivers, trends, priorities for financial institutions in our interview today. But before we start, Kay, could you perhaps tell the audience a little bit about yourself, a bit about your background and your interest in this area, please?
Of course, and thank you, Andrew, for inviting me into the A-Team. I'm actually a KPMG partner, and I've been a partner at the firm for just over 2 years, and I act as the Vice Chair for Financial Services. But before I became involved within KPMG, I was an elected member of the European Parliament for 10 years, most latterly as the Vice Chair of the Econ Committee. So did a large number of financial legislation during my 10-year tenure. And in particular, my last set of files were those on ESG. So the 2018 set of sustainable finance legislative files, including the taxonomy and indeed the SFDR, which everybody seems to be grappling with at the moment. So my interest has started off being legislative in terms of being part of the team putting the legislation together. But more latterly, it's been about helping my clients at KPMG across financial services try to implement those rules as they've now come into force.
Fabulous. So thanks for that. So you were really at the ground floor. I mean, you were at the nascent stage of ESG as we know it.
Absolutely. And it's been a really interesting experience for me, seeing it from the legislative side and now seeing it from the implementation side and realizing how difficult some of the things that in theory sound as if they are a good idea to now seeing how difficult that is for many of those firms to actually be trying to comply with them. And so it's been interesting to, I guess, the whole poacher turned gamekeeper, but in reverse, I suspect.
Very good. Okay, so let's kick off with the questions that we have and see how we get on. Broadly, as you see it, Kay, what role can financial services and capital markets firms play in promoting sustainability, and how does that translate into driving the transition to ESG and sustainable investing?
So I think we're now actually at a stage where everyone understands that financial services and capital markets have a role, but just how central that role is may not be so well understood. And I think it's incredibly important, and indeed, I would say absolutely central to transition. If there's no finance, then there will be no transition to net zero, because actually the funding is going to be critically important for that journey for many corporations involved, particularly in carbon intensive industries. But I guess the question would be, how important is it? If we look to government, they see that finance providers are the primary lever in which they can use to implement their policies. And certainly that's where we were with the EU. It was designed such that if you went for the source of capital, you would change behavior in the corporate world much more quickly. But it's not just government and legislators who are actually putting the pressure right now on companies to do things differently. There's also pressure from customers, from stakeholders, in the capital markets world, certainly from investors. And I think a good example of that is where asset managers are actually increasing the demand for sustainable funds. There's huge amounts of new investments going in quarter after quarter, and that's because their investor community are really seeking those new funds to invest in. So I think there's lots going on, and indeed, the more that the regulators, particularly if you look at the BES climate stress tests that the Bank of England have forced UK banks to do in the last year, you're going to start to see, as they start to report what their credit is being given for, you're going to start to see that the Bank of England and other central bankers are probably going to say that the cost of credit will increase for some borrowers, meaning that there'll be less appetite to lend or a higher cost of credit. And that really does start to incentivize a change in behavior. And I think because banks and capital markets are going to be responsible for their financed emissions, you're going to really start to see change happen. And I really think, the depth and breadth of this, with central to all of that being financial services providers, whether they be infrastructure or indeed facilitators, intermediaries, I genuinely think that they are going to be at the heart of all of this. And I started off by saying it wasn't well understood, but I'll kind of give you a bit of an example on that. We know full well that our oil and gas companies that KPMG have got as big clients of ours, they're talking about net zero by 2050. But when I talk to my clients in financial services, whether they be asset managers or indeed the banks, they're talking about a maximum of 10 years before they'll be moving out of this mainstream space. So we've got a 20-year funding gap somewhere in there. So we need to work out how to fund that 20-year gap and how to fund the true transition, which may indeed be new investment products.
Very good. So in terms of the here and now, how would you characterize awareness of the need to embrace ESG within the firms that you come into contact with, in your current role, and where do you see most of the work being required? Is it in the E, the S, or the G of ESG?
So I think it's probably going to be helpful for me to characterize where my clients are at the moment and who I work with. So primarily I work with many of the global players, so particularly the investment banks, large insurers, asset managers, private equity funds and their managers. So across the whole of FS, and in the larger institutions, it's really fair to say that there is now a very high awareness. And they certainly are now trying to take that knowledge that they have of the journey they need to go on to many of their investee companies or indeed to their clients, customers that they're lending to. So they're actually now trying to disseminate that information and requests to SMEs and much, much smaller entities who are less informed at this point in time and probably less ready to take on this challenge. But as a firm, KPMG works across all kinds of clients, not just financial services. We work across the broader spectrum. And we also go from very large to very small companies. And certainly the larger companies are all aware. They've got dedicated teams. They're all aware of their net zero commitments. They're aware of the legislative framework around them requiring disclosures. But the reality is that many of the smaller, medium-sized firms are really struggling with knowing how they're going to interact and interface with this. And so many of them are going to have to provide help to their clients in terms of helping them get there. And, greenwashing is going to be a major thing. And I think, everybody is now aware that there is sustainable finance products out there that maybe are not quite as sustainable as people would like them to be. And there's a huge spectrum that I think we need to take into account. But many of the global players are now wanting to be seen as leaders in this field. So I think greenwashing will become a thing of the past. But many of the corporates will say, well, if I'm funding a green project, does that mean that my entire financing could be called green finance? And this is a huge debate we're having with customers at the moment as to whether or not they really want to actually say that their business as usual is sustainable finance, or indeed whether they should now prioritize areas for sustainability that their financing gets ring-fenced for, and therefore they don't get accused of greenwashing. But we've got huge amounts of work going on in this space, and climate is much further forwards. I think people have got, with COP26 coming up in November, climate has been top of the agenda. But E, S, and G are important. Governance has gone up, everyone's sort of agenda in terms of the board and the way in which they deal with that. But linking the governance with the S is going to be really important. That's social value, social impact, what we really mean by that. Now, we helped author a report by the IRSG recently on accelerating the S in ESG. And that's really about bringing things like the D&I to the fore, bringing things like gender pay gap, not just in the UK, but across the whole of your business. Can you really pinpoint as to what the impact your business is on society? And certainly I've got some firms, some of the large banks, for example, working on greening UK housing stock. So NatWest is hoping to be a leader in that. And they're bringing the E together with the S and G to try and actually bring a product to market where they're bringing everybody to the table to try and get everyone to change their behavior. And so I think companies are taking a very responsible attitude, particularly in financial services, where they were put in the middle of this by the legislators and by governments, but they're responding in a really positive way, trying to make a difference and really trying to bring the E, S, and G together.
Interesting that there's sort of a groundswell, irrespective of the sort of regulatory environment, if you like, that is coming bottom up as well as top down. To my mind, to date, ESG hasn't been driven by stringent regulatory mandate. Things do seem to be changing, though. So from where you sit, what emerging regulations do you expect to have the most impact on how financial institutions approach ESG, and in what kind of ways do you think those impacts will be felt?
So I think there are quite a few things going on here, and much of this is very much about where you sit. So if you sit in the EU right now, I'm not sure any firm, whether they be a financial services entity or indeed a corporate, would say that there hasn't been a regulatory push for them. So they have been driven by regulatory change, by legislation. And so that really has influenced things there. But it really does depend on your national and, in some respects, regional organizations and how they meet national regional requirements. So I think people are seeing it in very different ways. And, for example, the US is much further behind. So if you're a US financial institution leaning into the rest of the world, you haven't had that regulatory push from your domestic regulators, and you haven't had the legislative framework to lean into. Whereas actually, if you've got a significant business in Europe, the extraterritorial reach has already been significant. So you've been trying to do the best and the right thing for that. And often that means putting across your global business. So the extraterritorial reach is going into these global firms and actually affecting them not just in the EU, but beyond. And of course, the UK was part of the EU's negotiations when the legislation was drafted. So they haven't adopted it fully under UK law right now, but they're following it very closely. And certainly all of the requirements on banks and asset managers are very closely aligned to what the EU is intending. And their task force they've set up recently certainly are using the EU as a guideline for where they could now simplify it, but get certainly very similar outcomes to what the EU's after. But I think many of these global firms want these to be global standards. So it's going to be really important that we now actually have, either we have a global standard that everybody have as a minimum, or you have this competition that ends up happening between different regions. So for me, I am really hoping that the International Sustainability Standards Board that's been proposed by the IFRS Foundation, supported by IOSCO, I really hope that for capital markets and for those listed entities globally, that will become an international standard, a true standard that everybody therefore can compare apples with apples, rather than having a mismatch in data between different regions of the world. And if that global activity takes off, I think that will be really the start of better quality data. Better quality data means better analytics. Better analytics means that everybody's going to pay much more attention to it when they know that there's quality behind the information that they're getting. They can make decisions in terms of capital market investment products much more easily. So I'm really, I think we're at the cusp of something really taking off. And it's all well and good being local, but most big firms that make a difference are global in their reach. So actually having those global standards for me is quite key.
So, I mean, my next question was going to be about the fact that many ESG regulations there are many different regulations, policies, guidelines around the place. It's a somewhat fragmented landscape, if you like. So, how do you foresee financial institutions adopting a more standardized approach? You've sort of addressed that, but is there more they could be doing?
So there is a lot more that they can do. I think, many of the firms are actually, as I said, taking what they're doing in the EU and actually now putting those standards to bear across the rest of their portfolios. So they're almost sort of taking it, if we have to do it once, we might as well do it across the entirety of our businesses. Some of the EU rules are very stringent and therefore are not easily adopted elsewhere. But the principles, I think, probably do hold quite well. And for me, the EU isn't finished yet. There is a huge amount of legislation still pending that includes corporate disclosures on non-financial information. And indeed, we're going to see much more emphasis from the EU. They've done the climate standards within the taxonomy. They're going to actually be now publishing the social standards that they're expecting for companies to adhere to. So there's a lot still ongoing. It's an evolution, not a point in time. And certainly as that regulatory outlook develops, companies will say, okay, this is relevant for my global portfolio, therefore I'm going to apply it. And in other areas, they'll say, actually, do you know what? This is only applicable to my EU business or to my UK business. I'm not going to put that across the piece. And some of that will be things like the conduct. You can actually apply certain standards in terms of gender diversity and everything else to some of your more advanced Western businesses that you might not find appropriate to put across the whole of your business for cultural reasons at this point in time. So I think there's quite a few more difficulties when it comes to putting, particularly the S across your global portfolio. The E is probably easier to do globally than the S.
Yeah. That's understandable. Sort of drilling down a little bit into the impact on some of the firms that we're talking about and some of the people who are listening in today. What do you see as the specific cultural, organizational and workflow challenges that firms are facing as they seek to adopt operating models for sustainable investing? What are they actually having to put into place?
So I think in the first few years when companies were taking this on board, particularly in financial services firms, it was very much about having an ESG unit and actually having individuals who were expert in this, who would sit in a little unit and advise the rest of the firm. I think most of the very large financial services organizations that I now work with are actually embedding ESG within everything that they do. So it's no longer just a specialist team adding on information. It's now core to some of the decision making. And most firms are not there yet. They haven't truly managed to embed it. Fixing large financial institutions, like any big organization, is a bit like turning around a super tanker. It takes a lot of time and you need the space to change and you need to build the momentum for that change within an organization. But most of my firms that I advise are making fundamental changes to large parts of their organization. They're thinking about, how do they actually offer credit to firms? Who do they offer it to and on what terms? How do they finance certain projects? Do they divide up the corporate that they represent into those sustainable parts of their business versus the non-sustainable and figure out how they actually analyze the market risk? How do they onboard their clients? These are big, big questions they're all having to ask. And it's not just policies and process, it's a set of skills. And I'm not sure all financial services firms right now have got the right mix. And there's certainly, I think, globally, a shortage of ESG experts at the moment. And most have already just been focusing on climate so far. So shifting to thinking about the S in ESG means you need to shine a light on your recruitment, on your promotion, on your rewards and your retention. So the entire HR process and your cultural societal impact is going to be a much bigger project and something that having to embed that across the firm is going to be really quite difficult. So I think asset managers probably thinking about this very deeply right now, and certainly those at the leading edge who've been doing impact investing for years already have certain guardrails around them as to how they operate. Others who are much broader in their mandate haven't thought yet in so much detail, but they're all getting there. Certainly whether it's banks, market infrastructure, or asset managers, private equity firms, they're all taking this very seriously. They have individuals who understand ESG, but the changing of the culture and embedding that ESG mentality across an organization is a large-scale process. So I think it's going to take a bit of time to actually get to the end result.
Absolutely. In terms of practicalities, what do you see as the main data integration, technology-related challenges that firms will be facing as they seek to put that kind of framework into place?
So I think it's going to depend on what part of the financial services industry that you're actually in as to where some of your data bottlenecks are going to happen. But, they've all got their own data imperatives and challenges. And in particular, banks' lending activities have been at the vanguard here, because that's where the Bank of England in particular has been focusing, and certainly the EBA and ECB will be taking a similar tack this year. For me, it's very much, when you've got investment banks, they've got a broader client base. It's slightly different. So you need to actually really look at their exposure to the ESG credentials of a broad range of corporates. And increasingly, it's not just about, the corporates that you're actually looking after in those that have a legislative requirement to disclose. It's how do you disclose the corporate activity, of your lending or indeed your investment banking activity in countries that don't have a regulatory requirement. So if you've got a global footprint in 100 plus countries, maybe 4 or 5 of those countries have got disclosure requirements, so you've got the data to hand, but the vast majority of them you don't, so you're having to make some assumptions. And I think most banks are very conscious of the impact of climate change on key customer segments. And some of them are now starting to say that financing generally is going to actually be more expensive. So the obvious one would be that mortgage finance to borrowers buying property in flood risk areas could easily be a very low-hanging fruit that they go after. Insurers are facing significant business risks. And so, we know that they're at the heart of the ESG agenda. They are suffering some of the financial consequences already of some of the climate change that we're seeing in various parts of the world. So they take it really seriously and are now putting an ESG lens to everything. But I wouldn't forget the asset and wealth managers. They are key investors in every type of corporate. They hold both equity and debt, and ESG is increasingly an important consideration when they construct their portfolios and make their selections in terms of what makes it the cut and what doesn't. So for me, that data that they have access to is really important. And there are lots of firms out there offering data at the moment where they compile corporate data and they give each company a rating, but there's nothing that tells you what that rating has had happen to it in order to come out with a final number. It's very much a black box. And certainly we've got many, many clients at the moment, either in the capital markets or indeed as asset managers, saying, actually, that's not good enough for us anymore. We don't want to have a black box number. We want to be able to set our own criteria. We want to take the data in for ourselves and we want to analyze it and match it to our ESG criteria, what we think is good, rather than what some arbitrary third person thinks is good. And so I think they're unpicking that data and they're using it. So the better the quality of the data, the better the input, the better the output they're going to have. And for me, that's going to be really where we're going to see things move. As the standards become much better, globally, you're going to start to see the data quality improve and then the analytics follow. So I'm really, really keen for that to be the case. And most firms are spending a lot of money analyzing data. You get a compromise because the data is only as good as the disclosure you have. So if companies are saying this is what we're doing, do you take them at their word? Or do you have it verified by an external source? And I think we're going to get to the stage where data assurance becomes a really major thing. And we're going to have to work out what we do with that. Does that get done by the normal assurance, firms like my own as the Big Four, or does it go to anybody who can verify that data for you, depending on what field? So I think, there's a lot of work to be done. And ESG data right now is patchy, but I think the caliber and quality is improving. We just need to make sure it continues to do that.
Do you see, as firms look for more data to help support these activities, I mean, is there an incentive for them? Is there a competitive advantage to be had for having better data to support your ESG activities?
So I think the data is key, and there are people providing data right now, but as with anything else, and capital markets providers know more than anything else, you can shop around for data from different places. It really does matter where you get it from, but you also then need to clean up that data so you are comparing like with like. So for me, it's really important that the data providing firms work with those who are using it to make sure they're delivering what is required. And I think the technology aspect of this is going to really improve. So there are lots of people out there, and certainly in the fintech space, huge numbers of companies who are looking at the ESG space and saying, this is a huge source of data and knowledge and intelligence. How can we apply solutions to this that maybe make it easier for asset managers and for those working in capital markets to actually absorb the data and to be able to utilize it in their models? So I'm really quite optimistic. There's a lot going on, and a lot that actually is going to happen quite quickly.
Very good. So look, we've covered a lot of ground. We're nearly out of time. Final sort of open-ended question for you to address briefly. How should firms be preparing now for incoming ESG-related regulatory change? What would be your advice to people setting out now as to what approaches they should take?
So I think each subsector of financial services needs to think about this slightly differently. But for me, it's about embedding it in the culture of your firm. So every part of your institution needs to understand the whole ESG agenda. They need to understand where the immediate priorities are for compliance reasons, but they also need to look at where their customers are requiring them to go. So we know that asset holders are going to have much bigger demands. We know that we've got government legislation coming from all different parts of the world. And ultimately, you need to keep an eye on what is required and what your customers are wanting. They may not align completely at this point in time, but really you have to decide if you want to play at the front end and lead this piece of work, or whether you just want to be a close follower, or indeed, bringing up the backside of this. I'm not sure anybody really wants to be in that position. So I think, ultimately, we've got corporates who are moving quite quickly. We've got corporates who are moving very slowly. And I think firms in financial services are going to have to work with all ends of that spectrum to really try and make a difference and make sure that they can really be the facilitators of change that the legislators think they can be.
Fabulous. Well, look, we're out of time. Kay, thanks so much for your insight. Thanks for your generosity in sharing your insight with us today. Really appreciate it. We're going to close out this session now and hand back to my colleague Andrew in the studio. Thanks so much, Kay. By which I think he means me. Welcome back. Yes, thanks to Kay Swinburne there for sharing her insights with us. A great session. I noticed a few questions in Slido there, and we'll be passing those along to Kay, who will be responding through our ESG Insight channel in due course. And we'll also see if the next session wants to sort of have a crack at some of those questions. So moving right along, let's move on to the next panel. This one is going to be on addressing ESG data and reporting challenges. It's going to be moderated by Navin Ronia, partner at TCS and MD at the UK Steering Committee of PRMIA. Navin's areas of expertise in ESG lie in ESG regulations and framework design, data sourcing, consolidation across ESG, climate risk and sustainability, taxonomy development and application of data points to address climate stress testing, sustainable product development, carbon trading, and net zero targeting. Thanks for joining us, Navin. I'm going to pass the reins over to you. Thank you.
And thank you so much, Andrew, and thank you for your kind words today as well. And an excellent first opening session on today's panel. So thank you to Kay from KPMG as well. Very insightful comments there as well. So look, what are we going to be talking about in this session for the next 40-50 minutes? We're going to be talking about the challenges with ESG data, and especially the reporting and the challenges that we find around reporting as well. We'd like to take you through what we are all seeing in the industry, the issues that we are seeing on the ground as well. We also know about the plethora of ESG frameworks and standards that are out there, GRI, SASB, IR, TCFD. Where do we start, right? So we want to hear more from our panel today on how they are dealing with that issue as well. What we'd also like to take you through today is get some feedback from the audience. What are the challenges that you're facing? It would be great to get questions throughout the session as well, and we'll be taking questions as we go along. We'll also be moving to a poll and talking about the finding out what your real experiences are about ESG and what does it really mean as well. It's very important to think about what are the issues we're having with data sourcing. What about the data providers, the startups, the fintechs, the big ones like Moody's and Fitch? How are they helping on this journey? And let's not just forget that this is a journey that we are on as well. What about the processing of the data? We all hear those very sexy concepts of AI, ML, NLP. How do we deal with that as well? How do we take qualitative and quantitative measures in ESG as well? So what I'd like to do today is basically introduce to you the panel, and it would be great to start with Hani and just give an intro about yourself and your firm, and then we can move down the move around the room as well. So just a quick intro from yourself, Hani.
Thank you, Navin, and good morning. Really enjoyed the first session there from Kay. I'm Hani Choueiri, Chief Data Officer at Aldermore Bank. I'm also Vice Chair of the GLIFE, which is the Global Legal Entity Identifier. That's been set up by the regulators post-financial crisis. So that's quite key in the comparability and legal entity reporting, of course. There's advocate of ESG more broadly, but also the World Economic Forum's stakeholder capitalism model is one that I really love, and probably mention it a couple of times in the conversations today. So really looking forward to it, Navin.
Thank you so much. Lynn?
Hi everyone, Lynn Watts. I am currently Head of Data Governance at Royal London. I've only been here 3 weeks, but my previous experience has been at Lloyds Banking Group implementing data governance as Group Head of Data Governance there, specifically, influencing the BCBS 239 programme and more broadly introducing those data governance concepts. And then I was at Legal and General Investment Management during lockdown, and it was there that I really, got involved in the ESG project. So hoping to bring some experience from both of those roles to this session today.
Thank you so much as well. I know we were having technical issues from Fraser. I'm not sure if Fraser is with us. Fraser? are you with us?
Hi, Navin. Hopefully you can hear me okay. Yeah, hi. So I'm a global product manager for FinReg products at Adenza, which was formerly Axiom SL. We're a kind of regulatory and disclosure and data management solution provider. So my kind of focus in this area is, we've created a data management and ESG disclosure solution, which a lot of our clients are starting to utilize to help them with the global disclosure requirements and the complexity that kind of brings in. So hopefully I can touch on a few of those points and the challenges that we're seeing in the market today.
Thank you so much, Fraser. And finally, Phil.
Hi, I'm Philip Miller at Solidatus. I'm the co-CEO and co-founder there. I guess my own background is regulatory reporting. I spent about 10 years at HSBC running the technical regulatory reporting framework there, from Dodd-Frank all the way through to MiFID II. At Solidatus, we're interested in metadata, and I guess with regards to ESG, it's a supply chain of data. It looks very similar in many respects to the regulatory reporting that's been done over the last 10, 15 years now. And we have, as Fraser said, seen a lot of interest from our clients and a lot of uptake in terms of that supply chain and the taxonomy aspects of ESG, and particularly around the differing frameworks as you had in your introduction, and how they interact with each other, and the horizon scanning around that too.
Thank you so much, Philip, and thank you so much to everyone for their unique introductions as well. A very powerful panel that we have today. So, look, we're going to get stuck into it, folks. What we'd like to do is open with a polling question as well. And while we have the polling question open, we will kick off with our panel discussion as well. So if we move to our polling question, which should shortly appear on your screens, very simple. What are the challenges of successful ESG data sourcing and management at your organization? And let me just repeat that. Let me just spell out the responses. Too many data sources to select from, no standardization of the data, high volume of data but poor in quality, challenges to integrate with existing systems as well. So while you folks are all having a look at that question and scratching your heads and thinking what to vote on as well, let's get stuck into the discussion. So look, let me open it up to everybody, and I'm happy to take whoever wants to go first DV on this as well. What are the real and true challenges of data sourcing and data management in ESG?
Navin, do you want me to go first?
Go for it, Annie.
All right. So it's Tuesday today, isn't it? It's don't want to start too negative, but I think there's far too much regulation. I think it's far too complex. There's a lack of comparability in my view. There's too many standard setters. There's a lack of regulatory harmonization. I think Kate alluded to that earlier. So I think at the current rate, the real challenge is, we used to KYC customer, we've got to EYC our customers. That's a tough job. It's a tough job to EYC a customer, right? Because of the nature of the variety of standards, regulation. But so I think, to me, that the problem or the challenges are because, there's a lack of, the biggest regulators getting around a table and hammering this thing out, right? There's consultations every day. You see a different consultation from a different region, be it on climate, diversity, biodiversity, sustainability, right? And it's a lot of effort for many, many organizations. Global organizations particularly are going to really, really find it tough, right? And bear in mind that firms, unlike other regulation, they're both producers and consumers of this data, right? Think about BCBS 239, you're a producer of data, you send it to the regulators, and you confirm your data and your quality and your timeliness and your accuracy and what have you. But this is a two-way thing, which is quite interesting, right? So you're producing this data across the various places where you do business, but at the same time, you've got to consume data, particularly if you're investing for your suppliers even, right? So there's two sides of this. So there's a political challenge as well that leads to data challenges, which is, what does good look like? From a climate perspective, we're parts of the world consume, parts of the world manufacture. So where do you draw the credentials around climate and ESG? So we need that transparency. We can't just say we're just green. There's shades of this. We need to look at maturity. We need to look at how do we help organizations become more green. It's actually more important to become more green rather than to invest in pure green products today. You can make a much bigger difference by investing where it's going to make a big difference.
Of course.
So talk about, I think, lots of challenges, Naveen, but that's kind of my thoughts to start. Sorry, that sounded a bit too negative, but that's kind of the relation to the ground.
Let's try and move to the positive. So, I mean, if I move to Lynn, you're coming from the asset management perspective. We know ESG needs to basically be looked at from a forward-looking perspective. Hani talked about the green side, but there's a social and governance aspects that we need to think about, as well as the green aspects, in long-term products such as pensions, because we are all scratching our heads and thinking, where is the climate going to be? What's the correlation between climate and social and governance factors? What's the sovereign policy of going to net zero as well? I mean, what do you see around the challenges of data, Lynn, and the sourcing that's required?
It's a good challenge, and I guess I've mostly come at it from the governance point of view rather than looking at all the detail. But what I would say that we've seen specifically is that there may well be 2 or 3 different sources of data, even just within your own organisation, having different teams that have tried to do this activity a few times themselves, and then when it's come together as a major programme, you're still looking and going, okay, we've got 2 or 3 choices on our sourcing, and what metrics are we actually going to use? What calculations are we going to use? And who's going to be responsible for defining those? So I would say from my perspective, I think ESG data is very much the same as any other data challenges. Where is our data? What are we going to source it from? What are our choices for? Because a lot of people have brought in the data and landed it in different places in the organisation and are treating it in different ways. So again, trying to get that consistency around internal use of the data and how that is then managed, I think, are the key challenges that I've seen.
Thank you, Lynn. And Philip, your thoughts there on what Hani and Lynn has commented on. What are your folks saying that you're speaking to in the industry?
So I think it depends in many respects if you're just dealing with one country, and as Lynn says, if you're dealing with multiple countries in particular, you can find that there'll be different levels of like seriousness. How different countries are perceiving the implementation of the regulations as well, and you kind of saw this through through the real-time regulatory reporting in the late noughties, mid-teens of the over things like Dodd-Frank through to MiFID II, where you saw different people taking things seriously at different periods in time. So it's all very serious for one jurisdiction while it was about to be implemented, and it wasn't for another. And actually, the level of concentration, if you like, on producing quality can vary. And of course, when that goes over different taxonomies, you can have different interpretations of what similar things mean as well. And all of that can combine to sort of give you a kind of, in my world, it's an equivalence problem. So if one person's saying one thing at one moment in time, do they really mean the same thing as another person? If you've got a multinational having to report for a group, say in one country, and the local entity just needing to report locally, are they really doing the same things? So getting a kind of global understanding, this framework problem is, and we're going to talk about it later, but the framework problem is colossal in this, and there has to be, as there was with with all reporting standards, there has to be a consolidation and a recognition that you can't have 1,500 reporting standards over a couple of hundred countries.
Yes, and we'll be going into that further on as we progress. And final comments from yourself, Fraser, before we return back to the polling results.
Absolutely. So yeah, I think it's interesting you say, oh, what's the positive angle here, because it's all negative. But you know, I think the negativity comes from the fact that, you know, organizations are not local; they're global by nature. Asset managers are global. It's very hard to find one which is very much a local entity. So you start to have the same problems that Philip's just mentioned there, which is with the divergence or the lack of framework across all the different jurisdictions. How do you then source data which then appeals or is applicable to all your different jurisdictions? The principles are exactly the same. Everyone's looking at climates, they're looking at social and governance, maybe slightly less climate's the biggest kind of pain point. But actually having all of those different data sources, how do you then get the same answer to be applicable across all jurisdictions when actually there's a lot of variance across those frameworks? And that's why the whole concept of greenwashing's there, right? Is because if you get multiple different angles, if you're producing the same data and you're trying to apply it across everywhere, there's obviously going to be some divergence and there's going to be some favorable options that you can take in terms of how you do that reporting. And the reputational risk for organizations is huge. So they're obviously going to try and choose the more positive side. So I think it's until we standardize the framework until there's a bit of consolidation of that view, it's going to be very challenging to create a standard and to try and get organizations to follow a standard. And you know, the morality in the industry now is there to make sure that we're putting the best foot forward.
Of course. And thank you so much, Fraser. So I think this would be a good point to reveal our results from the poll as well. Very interesting standardization. I think we're all looking for guidance there. Poor quality data is about 15%, too many data sources, 4%. That's very surprising because there are a plethora of data sources out there as well. And integration, I would probably say that's being driven by the fact we haven't done much ESG implementation yet because we're still trying to figure out standardization. Thoughts from the panel on the results? I'm going to open that up to anybody. First takers.
Well, I'm not surprised.
Yeah,
go for it, Lynn.
Oh, sorry, Philip.
No, go for it, Lynn.
I was just going to say, my immediate interest was drawn to that bottom one. ESG data is difficult to integrate with existing systems, and I can definitely say that I've seen that. And I would say that isn't actually pertinent to ESG necessarily. I think it's the maturity of most organisations in their level of understanding of their data and the complexity of their systems that just means ESG data is fallen foul of the fact that, you know, there's not that great data management across organisations. So I'm not actually surprised with that one, but I guess given the choice, I'd have probably gone with the top one myself as well.
Yeah, I think I'm in complete agreement with Lynn. You know, it's the first problem first, right? You're staring at the headlights of 1,500 cars coming towards you. Which one are you going to dodge first? I mean, speaking as a software engineer, the data integration thing is going to kill everyone in the end. But the first one is to select what your target is. What are you aiming for? And if you can't see that, for the wood for the trees, then that's going to be what's on everyone's mind. And this is the point. The consolidation has to happen really quickly in order to overcome this, so that people can concentrate on the real problem.
And Hani, would you agree?
Yeah, I agree with that. I think that's what I would have expected from this, right? But I think when I read behind this problem, right, sits the fact that, to me, people shouldn't have to go and buy ESG data. ESG data is not something for sale, right? ESG data is something produced by organizations to disclose their credentials, where they are on the journey, the fact that they're focusing on climate, focusing on diversity at board level, focusing on societal impact. And I think it worries me when organizations have to go and buy data. Now, you may buy the denominators, right? You may buy the total, a country's carbon emissions, for example. Yeah, you can buy those denominators. But certainly, if you have to go out and buy that data, it's worrying. So it means that there's a lack of standards, lack of comparability, leading people to go off at tangents, try to go and source data from too many places. And I think that's where the regulators have to come in and kind of agree, how will this data be shared and practically used. I think, on the positive side, let's be a bit more positive.
Let's be positive.
Right? And I think, yeah, maybe a bit more positive. I think the biggest benefit here is there is huge amount of awareness. Everybody is thinking, everybody's actually, setting standards, setting goals,
sure,
and driving us to a better place. No doubt about that. I think, how you compare one against the other, is it 5%, 7%? It's going to be very difficult. But I think we're heading in the right direction from a holistic perspective, right? There's just so much focusing on this. Nobody's buying diesel cars, right? Know that. But there's a lot for governments and regulators to do at the same time.
You'd be disappointed to know that I just bought a big diesel SUV, mild hybrid though. So shame on myself, right? But anyway, let's keep moving on, right? It'd be good to get Fraser's opinion here as well, and tie that into the next question about evaluating data providers as well. And what should asset managers, the buy side, and let's extend that to sell side insurance, what should they be looking at from a methodologies and perspective and an ESG scoring perspective? We have internal ESG ratings that are produced and that can be used. We have external ESG ratings as well. As Hani probably disappointed many in the industry that you shouldn't be selling the data anyway, but there's some ratings and methodology sold there as well. What's your opinion there, Fraser? And do you think the data selection should be driven by, say, sector by sector, i.e. let's look at oil and gas and then buildings and construction, or do you think institutions should go in and just do the huge big bang, and use all those funky words like agile, etc. Fraser?
Yeah, I think the poll question was a nice segue into this kind of discussion. Because as Harry said, all of these different data providers providing different methodologies, different calculations of the level of greenness, if we put it that way. I guess the problem there is, and I read this kind of recently, was less than 30% of the disclosing organizations under NFRD, they're actually providing granular enough information for that information to feed into the financial industry. So obviously within the asset management and even within the credit institution space, you're having to report a lot of information on your investments and obviously your business portfolio. Now, if that information is not readily available or being produced in something which provides that granularity and that quality, there then has to be some kind of forecasting or some way of deriving that information. And that's where I think data providers and a lot of the methodologies that they've published, they're very much kind of looking at multiple different sources of that information. One is the disclosure from the actual institutions themselves, but then they're also looking at media articles, they're looking at social media, they're looking at commentary, they're looking at all of these different sources to pull that information together, and how they actually collate that information, how they then produce the green or the ESG scoring is slightly different between the different organizations. Now that just creates inconsistency. You've then got one organization that's then got 4 different scorings. It's then up to the organization to then say what scoring they want to use. And that subjectivity is not going to achieve what we need to achieve the climate standards of 2030. So a lot of the methodologies are either rule-based or they're principle-based, and they come to a common answer. The challenge is that the breadth that these data providers have in terms of all of the information on institutions is not complete. It's a huge area, it's a huge market. You have to start exploring oil and gas, you've got retail, you've got supply chain, you've got all of these different divergent markets, and they don't all work in the same way. So how can you apply the ratings commonly across the different sectors?
So sector by sector approach, and Fraser? Sorry to interrupt, but sector by sector approach is better than Big Bang?
So I see it as being a sector by sector approach. I mean, there's certain suppliers and certain data providers that provide a wide range of the sectors, but if you start to evaluate sector by sector, you're at least going to try and find the best source of information. And looking at those methodologies is extremely important. And that's where there's even a case for bringing multiple providers together and then using some kind of selection process to say, right, what provider do we want to use? Certain sectors will be their strengths, certain sectors are a weakness, and other ones, they complement the others. So actually, some of the big organizations that we're seeing are bringing in multiple data feeds to then consolidate and choose the best option. But again, going back to greenwashing, you've then got a choice of what you want to disclose or what you want to use, and that's what standards need.
And I mean, we had an excellent.
It's worthwhile.
Sorry, I was just going to quickly mention, just trying to tie in a question from our audience as well, from Patricia Aruka as well, and hopefully I pronounced that correctly as well. We know that data providers are providing 3 to 4 different ratings, and as part of NFRD, and then and then we have CSRD, etc., all the regulations on top, right? But what about outside the EU, where standards have not been, have not been embedded in yet as well, or they haven't even taken off, right? Yeah, and what Patricia's mentioning is an apple and pears sort of approach that needs to be. How do you deal with that?
It's tough, Naveen, right? I think, again, goes back to the whole regulatory harmonization. But, it's like this for most regulation. If you look at financial services regulation as well, it follows a common theme, kind of start, and then you end up with, hopefully in a couple of years' time, more and more harmonization as people then discover it's not possible to do this. I think the good thing is, just touching on Fraser's point earlier, I think the good thing is some of the regulations, I believe it's SASB, they'll have industry-specific kind of guidance. So you select your industry before you're going to go in and look at your reporting, which I think is really important. But then, of course, then you've got the other dimension is, you could be the same company doing the same thing in country A versus country B, and you'd be a lot greener in country B because you have renewable energy to draw from, right? So it's nothing to do with the organization's aspirations, but it's to do with the infrastructure in that country. So so much of it, that's why it kind of goes to the political level, right, and country level.
Of course. And if we move to our our next point, Philip, we've talked about the challenge around data, a plethora of standards out there, but a lot of this ESG data, and especially when you look at, say, climate data as well, it's very structured and it's very unstructured as well. The responses you get can be one-liners, they can be qualitative statements, right out to quantitative statements as well. What do you feel the challenges are, Philip, around, for data professionals on how to apply the classic BCBS 239 RDAR risk data aggregation reporting principles, Philip?
Well, data professionals are quantitative people. Essentially, they like standards. They like to understand the meaning of things. Unstructured itself isn't a problem. Lack of definition behind language, though, is, and it's going to lead to ambiguity in the first instance, and that's probably natural. If I think back to Dodd-Frank, we spent a year defining what a swap was, which is basic. It's one of the most basic financial instruments, literally one of the most basic financial instruments. But it took a year to work that out as an industry. It will take, as Hanny said, time for harmonization to take place. The standards will converge, understandings will converge, and that's got to happen. The immediate challenge, though, is to present something which, at least for your, let's say, for your corporate entity, is at least understood and defined for yourself. I think if you can explain what you are putting forward as a corporate entity in the first instance, you have a hope. If you can't, I mean, forget the industry or a country or whatever. If you can explain your own reporting, you're in a good place. Taking your reporting and converging it to a standard as taxonomies become more defined or harmonization of standards takes place is actually going to be relatively simple. And the key there is consistency. So within your organization, have a consistent approach to your understandings of this unstructured data. And actually, over time, I'm absolutely certain what will happen is that some of these things, I mean, climate data itself isn't unstructured. The presentation is, we will find that we will start to converge on this unstructured data as it is today will start to get more structured because it'll have to be. it'll be unworkable if it isn't.
And now, Hanny, your thoughts on what Philip just mentioned there as well, and what about example of qualitative statement? You can make a qualitative statement in an ESG report on, say, social and governance factors. How do you take a forward-looking approach?
Yeah, it takes some thinking, because if you look at most regulation, will actually prescribe, a description, or to say, well, describe your makeup of your board. And some metrics you could have, but actually describe your strategy. How do you embed risk management, climate risks in your framework? So, this is descriptive, right, by its nature. But, the interesting thing is, I've not yet read any sustainability report that looks bad, right? They all look great. Every sustainability report out there looks great. And it goes to the point, it's a hard job. I think I agree with Philip. I think eventually, look, that blurb is great because, it sets the tone. And actually, because it's publicly disclosed, typically, it drives the I suppose pressure and the drive on firms. Most firms want to do the right thing, right? And so it's a good thing that these are published. So it's not like it's useless, this unstructured data.
Sure.
It sets the tone, it sets a direction, right? And it galvanizes the organization around it. But collecting this stuff is really a challenge. I think most organizations are going to start thinking about centers of excellence around ESG, and kind of building a place where you bring in all this data, and that's going to help. I'll go back to my earlier point from a climate perspective, forgetting about the S and the G.
Yep.
I think it's the right incentives and infrastructure by government that's going to make the big difference. If you set the right incentives, it'll make firms do business in the right way. It'll make them less profitable if they don't do so, and less investable if they don't do so. I think they're trying to get the private sector to determine where I invest, try to get through all the metrics and the supplier and the chains and the interstate firm is so difficult, near enough impossible, And I think that's why the right incentives at the top, right infrastructure by governments is going to be the way to solve the climate crisis, in my opinion.
No, perfect, Hanny. And I think maybe, the evolution of ESG data and climate and doing the right thing is going to attract back the new millennials into the financial services, which has been hit with so many scandals, and will stop them from all going to Amazon and Google, right? And we'll have ping pong tables and free beer, hopefully, right? So hopefully ESG data will become part of that as well. But talking about BCBS 239 and the governance, Lynn, we know governance and layers of governance and layers of regulations frustrate, especially the revenue generators in financial organizations as well. Another example is GDPR as well. There are going to be privacy principles around a firm's net zero strategy, and how much of that can be disclosed outside, how much they'll disclose to a financial institution, right? How are you applying those principles of, say, BCBS 239, RDR, and GDPR to ESG data, Lynn?
Yeah, absolutely. I'll go back to my previous point. ESG data is still just data that needs to be managed. And I do agree, it needs to be frictionless. You do not want to put in layers and layers of governance and halt progress. But I think we should all still probably recognise that good practice is going to help rather than hinder. So my experience is, people have just not understood where the data is, what it means to Philip's point, how do we compare apples with apples if you don't have basic sound principles in place? So I think looking to BCBS, certainly in some of its principles, because it is an established reporting framework, there is just good practice outlined in it. So I won't teach everybody, the intricacies of BCBS. I'm sure you're familiar with it, but just some really key principles for me that I think everyone should be thinking about if they're not already are principle one around the strong governance. I think making sure that the board is promoting the need for ESG governance, that you've got strong data quality frameworks and it's part of your risk process, I think is absolutely essential. You sort of need this top down to make sure that it is effective across the organisation. In terms of principle two, architecture and infrastructure, I think you should make it part of your continuity planning, make sure that you really understand those taxonomies. We talked about that, apples and apples. and roles and responsibilities. You know, they do need to be in place, because otherwise, how are you going to have somebody that's responsible for the definitions of these things? Where do you hold people to be the authority for some of this information? Because otherwise you just don't know, and you're all navel gazing, and there will be no answer sometimes, and you're going to need, you know, tools such as metadata tools to help you understand what the options are. So I think things like that, so that we can aggregate and report that data in an effective way, are found from BCBS. I think we've touched on accuracy and integrity, and again, that's sort of a GDPR principle as well, but who doesn't want their data to be accurate, right? Striving towards understanding those sources and making sure we understand those business terms. I don't really think that anyone's going to disagree with that, as well as it being complete and timely. You know, you need to make sure that people can make decisions on this stuff. But I guess the key principle I just wanted to draw out, and we've touched on it already, is the adaptability point. So principle 6, I think, given where we are in the ESG evolution, it's going to change. It's going to be something that people need to adapt and realize that, you know, we don't necessarily have the standard approaches yet, and we might have to be a little bit flexible and understand drilling down into our data and making sure that we've got those dashboards for understanding it. So I would say they're probably the key ones I would have wanted to draw out for BCBS. And then in terms of GDPR, you know, obviously if it's got personal information, we have to comply. But even if it doesn't have that level of personal information, we all want to make sure that we're processing that data in a fair way. And that you can explain it. I would say you need to explain it, right? So you do not want a Daily Mail moment. You don't want any reputational risk. What you want to be able to do is be transparent. So I would just encourage people to really think through those good practice guidelines for ESG data in the same way you would for any data, making sure you risk assess as well. I mean, obviously, you do not want to put layers and layers of governance onto things that don't have the same level of risk, but that would be my steer.
Great, thank you so much, Lynn. And like, we've just got another question in as well, and ties into our next question. So the question that's coming through is, what's the standardization efforts that are happening to bring all these ESG frameworks together? So if we combine that together, you know, the IFRS has intervened, and they are looking to have global sustainable standards set up, and we're expecting a response from them sometime next year to see where that goes. So, you know, what can financial institution lean towards? Do they wait, use something in the interim? And if they're going to use a framework in the interim, what should it be, right? You know, SASB, GRI, SDG, TCFD, CDP, CSDP. We could be here all day going through all those frameworks. And secondly, you know, these frameworks are very, very critical to pricing decisions in markets. So taking that question from the audience and taking these plethora of standards, what is a fit for purpose ESG reporting framework for now, and as it evolves in the future as well? If we could start with Fraser, and then if Philip could just chime in afterwards. We've got 5 minutes left as well, guys.
Yeah, I'll keep it brief. So, yeah, I mean, I think you've just mentioned all of the challenges around that. I think the biggest challenge there is we don't really have enough. Obviously, within the Paris Agreement, a lot of the standards that have been set out within the governments, these are like 2030, 2035. That's not that far away from us now. So the fact that we're still trying to work out what a standard is in terms of how do we move forward is a bit worrying, because will we be able to achieve those targets? It's a big question mark. So I think, you know, a lot of these frameworks have a lot of good points to them. I think the challenge is that when you get so many different frameworks and so many different bodies proposing their framework, they're obviously trying to push for that to become the global standard. And you know, as I think Hanny mentioned earlier, SASB obviously has the different industry sectors and a different way of treating these. They've got lots of good points, lots of kind of points which are gaps. How do you create a standard? But the other bit is that multinational and international organizations, they have to somehow be able to factor in this into their disclosure requirements within all the different geographies. If there's no standard, do they have to apply all of these different frameworks in their different local jurisdictions? How can you either have to throw people at a problem, or you have to somehow do things in an appropriate way? So one of the things that we're kind of seeing is, a lot of the institutions are looking at global requirements, trying to understand what are the standards and what are the principles which are based in there, and trying to then create almost like an end-to-end data management and disclosure process which ticks all the boxes. And perhaps they have to adjust to some of the local nuances just to make sure that the disclosure is fitting. But they're very much looking at it on a global basis. So there may actually be an industry push for that standard, just because they're trying to reduce their operational overhead as part of these requirements. So I think that's where I kind of see the industries maybe moving. Oh. Will it be the framework? Will it be the institutions? Sure. We're playing a chicken and egg situation.
And Philip, your thoughts?
Well, if I'm speaking from a technologist point of view, it's to make sure that whatever you're doing is well defined. So if you pick a standard and it's the wrong standard, that you're not killed because you have to move to a different one. So interoperability is a big thing. As Lynn mentioned, understanding your metadata is critical, absolutely critical. So the definition of your own language internally is at least in this phase of the regulation, is totally going to define how well you perform later. Fit for purpose, it's going to be an institutional thing. Fit for purpose is how much effort you put into understanding your own taxonomy, your own data. And so if it really needs to be reapplied later, you can do that with not minimal effort, but you can do it in a way that's graceful. And also, you've got to be able to compare what you did last year with next year too. You can't just keep flowing through standards and not have any way of sort of, looking backwards and saying how your performance is changing. And we haven't really talked about that, but the horizon scanning, seeing what's coming towards you in the future and being able to apply things in the future to what you're doing today, it's going to be totally critical. You may have a standard today and know that in 2 years' time, you're going to use a different one. You've got to be graceful and be able to flow between those 2 points.
I like that word, graceful. You're very polite, Philip. Why don't we wrap up? We've got another 2 minutes left. Final thoughts from the panel. How is the IT and technology infrastructure going to evolve? And what's your personal advice, or advice on behalf of your company, or however you want to put it, caveat it, to practitioners managing ESG data? If we could start with Hani, and then Hani, Lynn, and then round off with Phil and Fraser.
Just
Hani.
To pick up on the last point, I think we've got to differentiate between a framework and a standard. I think there's really good frameworks. I mean, you just look online on the World Economic Forum's framework, but if you dig deep within it, at some point you hit a standard.
Yes.
Right. And if you look at the GRI 101-A, you'll see a very prescriptive standard. Some of it is saying describe something, but some of it is measure something. And this is what you include, this is what you exclude. So there's certainly, I think, to the point Philip and Lynn made, as long as you annotate that, okay, I'm working to this standard. You shouldn't have to create a standard, by the way. If you have to create a standard, we're in trouble already. You've got to use the standards out there, but describe what it is, annotate it, so you know what you're working towards. And I'd say, kind of start to build that. I'd say, for one of a better term, ESG hub, because you're already finding that there's HR data you need to draw upon.
Of course.
You need climate data, you need supplier data.
Mm-hmm.
Right? And I think the more you can pool the stuff, at least in one place where you have a definition, have a metric, have a measure.
Of course.
I think it's going to be really good. That's the key, I think, from my perspective.
No, thank you, Hani. Just final quick comments from yourself, Lynn.
I would just reiterate what we've talked about before in terms of that integration around where you are now. So understand where you are just generally in terms of your organization's management of data, how you need to integrate and understand, so that you can adapt and be flexible as as an ESG reporting solution in your framework matures.
Thank you so much, Lynn. And Fraser, and then Philip.
Yeah, I think the integration point's an interesting one, and I think there's a lot more people moving to use like cloud technologies and these kind of things. So, the native integration with these data providers is a key one. I do know that within industry, they are looking to create a centralized database of a lot of this information. It's being discussed, it's being kind of worked on in certain aspects. The integration of that information is going to be key. Organizations already have their core information available. Integrating or merging both sets of data, the ESG metadata with the core position and financial instruments, that is the key bit, and that's where you need to get a strong data management principles to ensure you do it properly.
Thank you. And final wrap-up comments from yourself, Philip.
I think it's simple. We've got to recognise that there's going to be change over time as well. Change will happen in this. You have to not plan for this to be a static thing. We're all talking about E, but there's S and G. There's things that are going to happen over time, and we prepare for change as well. Expect it to happen and be ready for it.
Excellent. You sound like President Obama and his famous slogan around change.
I'm happy to be compared to President Obama. That's fine.
Great, I didn't offend you, right? If it was an American, it might have been a different story. But let's, on that humorous note, let's close it there. Thank you so much to the panel. Thank you for all your time invested as well. I hope the audience have found this insightful as well. Any questions that you would like to ask us, please do feel free to reach out to us. We're all available on LinkedIn as well. And we look forward to seeing you again, and good luck with your ESG data implementation challenges and plethora of standards. And with that, I say good evening, good afternoon, good morning, wherever you are in the world. Thank you so much, everybody. Thank you, guys.
Thanks, everybody. Great session, excellent panel. Appreciate it from our panel of experts there. And Navin, obviously, very gracefully moderated session, so we appreciate that. Let's move on now. We're about to go into our final panel for today's event. As advertised, this panel is focused on leveraging data science and AI, NLP, and machine learning for insight. So maybe it's going to get a little technical. For this session, I'm pleased to welcome our moderator, Mark Davis. Mark is a partner with Element 22, data and analytics advisory firm, which is helping clients to modernize their activities around data management. Mark and the team have expertise to help clients understand and comply with regulations like SFD, FDR, and they also help clients to identify appropriate data sources or advanced technologies that can support ESG collection and analysis. Last point of introduction is that Mark and the Element 22 team have jointly developed a DLT-based platform for direct ESG data collection called ESGI. So with that in mind, I'm going to pass over to Mark. Over to you.
Thank you very much, Andrew, and welcome everybody to our panel on leveraging data science and AI, NLP, and machine learning for insight. I'll ask the expert speakers to introduce themselves in a moment. But before I do that, I just want to explain how you can get involved in the discussion today. So to the right of the video, you'll see a box for questions. And if you'd like to ask the experts any questions, we will take those questions from the audience at the end of today's discussion. So please feel free to add yours into the box under the questions tab. But let's get started. I'd like to start by asking the panelists to just give a customary 1-minute introduction to themselves and their role within their firms. And I'd like to start with Priyank, please.
Thank you. Thanks, Mark. Hi, this is Priyank. I lead innovation at M&G. My focus is on how do we externalize innovation that did the firm. Also, how do we bring in new ideas from outside, with a focus on 2 main areas: sustainability and data. Interestingly, they both have a strong connection to each other. That's what I do. Thank you.
Thank you, Priyank. Vincent, over to you.
Hi, my name is Vincent. I work at Lion Trust. I'm leading the data solutions team. What we do in the data solution team is we collect and automate all data streams and pipelines that come through the different data vendors provided, as well as our custodian data. And we we maximize the outcome of that data, and we distribute it across the company.
Fantastic. Thank you, Vincent. And Tanya.
So I'm Tanya CJ. I'm the CEO of Arenda, which is a SIX company. My background, I was a journalist for many years, led communications on a highly controversial environmental cleanup in Canada, was part of a carbon capture research group, and most recently the founder of and CEO of Arenda. My background has helped me in many ways, but my favorite part is being able to have a small role in one of the biggest changes in financial thinking, which is ESG. I'm very excited to hear from my panel colleagues, and thank you for the opportunity.
Fantastic. Thank you, Tanya. And Graham.
Thanks, Mark. Yeah, name's Graham Taylor. I work for Schroders Investment Management as the ESG data science lead. Within Schroders, I sit in the data insights unit, which is effectively the data science team. And within that team, we aim to bring scientific rigor to all decision making across Schroders. In particular, we have expertise in alternative data, big data, and a wide range of sort of skill sets across the team. So yeah, that's me. Thanks.
Okay, fantastic. Well, now we understand a little bit more about the experts that we have today, and some good diverse backgrounds as well. Maybe we can start with the first question. The first question I'm going to ask to Priyank, which is, how are you making use of ESG data today for your business insights and for your in-house modeling?
Okay. I think the first thing to remember is ESG data has been something part of our business for a long time. What has changed is the volume and the velocity of disclosures of information and the variety of ESG data that's coming in. So first, understanding that this has been something that we've been dealing with is the variety, volume, and the velocity at which it is coming in has changed. And that is what we are dealing with, and how do we make that data insightful and useful to decision making is the key focus for us. One example of that precisely would be if you have lots of companies talking about intent of reducing carbon emissions, which of those are actually taking actions? How would you identify that? Would be a challenge we would be dealing with.
Okay, fantastic. And Graham, any thoughts from Schroders and the work that you're doing?
Yeah, absolutely. I mean, so the DIU is a resource that's centralized in the investment division. So you can imagine we get a wide range of questions and internal clients engaging on the topic of ESG. With ESG in particular, I would put our clients into two main cohorts, and that's the investment desks themselves. So analysts on the desk reaching out and trying to get an empirical view of a particular, to either challenge or reinforce, a particular investment thesis. And then on the other side of the fence is the sustainability team, who also sit in the investment division, who we work with on building out proprietary models, things that we would, among other things, help us look at the impact of our investment operations. And those are the types of things that would be sort of rolled out across all of our product range where possible. But to just sort of bring it to life, I'll give you an example of one of our recent requests from an investment desk. It was from our emerging market desk. And they were interested in finding out more about weather patterns in Siberia in particular, so they could engage with the companies operating in this area in a more meaningful way. And there's third-party providers do this, and sell-side reports do this, but it's just not the level of granularity we found useful. So what we did was this geospatial project, we went out, found the location of particular assets associated with certain companies, georeferenced their locations, effectively put them on a map, stitched this together with a really great data set that we pipe in. It's about 20 billion rows of weather data updated daily, 10 years worth of history, giving you a global view at a 30-kilometer squared grid of weather patterns. And what we were particularly what the guys on the desk were particularly interested was interesting permafrost, right? So some of the company assets that we plotted are rigs, right? They're drilling rigs, and they depend on permafrost for stability. So you can imagine if permafrost starts to melt, the company is going to have a big problem. So it was, the analysts found it really valuable to be able to engage with that company on those issues and understand how they're mitigating those kinds of risks in future. And ultimately, it can lead to an investment decision. So it's, it's not just the investment decision, it's the engagement and the stewardship that comes with it. So yeah, I'd leave it there.
Fantastic. Well, thank you both for bringing that to life with some good examples as well. You mentioned, Graham, 20 billion rows of weather data, and clearly data scale is a challenge. I think it's something, Priyank, that you also spoke about as well in terms of the increasing scale. Can you explain, and this question, Tanya, I'll put to you, can you explain what methods are used to link, what are the unique challenges related to sourcing and processing the ESG data? So, Tanya, if I can go to you first on this.
I think one of the biggest challenges with sourcing ESG data is that ESG is actually hard. What I mean by that is that many of us, we've heard about greenwashing and wokewashing. Being a true ESG company is challenging. It requires change. It requires a realignment of culture for some companies. I mean, that's great if you were small and mighty, but much more challenging when you're a large organization with many, many moving parts. Yeah. It definitely doesn't happen overnight. And that forces some companies to make false ESG claims. They don't want to be viewed as not being aligned with society's values or talk about the challenges they are facing on their ESG journey, because sometimes it's not taken so well. So the faking of ESG is a real problem, and it's undermining the work that really good companies are doing. Companies are purposely being vague in their ESG disclosures. So as an investor, it's important that we don't rely solely on those disclosures. We need the entire data story, not just part of it. So getting that complete picture is a challenge. We need to go beyond a simple flagging data set. And that means connecting to alternative data sources in many cases, and making that compatible with traditional financial data with the help of AI. So sourcing data isn't the challenge. The challenge is finding the right combination of data that meets your purpose.
Great. Thank you for that, Tanya. Graham, unique challenges related to sourcing and processing.
Yeah, I mean, when I see that, I think ESG data, and I think of that in two ways. So ESG data, I immediately think of a sort of pre-built data set that you might get from one of your big data providers, carbon emission, NOx emissions, do you have a water policy in place, etc. And then alongside that is alternative data and structured data, and the two things would form our ESG data, if you like. So with regards to the sort of pre-built data sets, to Tanya's point, it's all about the reporting. If I do a very quick scan of one of the providers on my screen, I see huge holes in the data. The column headers are great, but there's nothing in them, right? It's it's self-reported, so it's subject to greenwashing, as we say. Everything that comes with the kind of the reporting side of things, large cap bias, developed market bias, etc., etc. And that's with the kind of the less esoteric data set, right? So, and on the other side, the alternative data, a bit of a challenge with that is sort of built into your question. It's ESG data, but there is no universally accepted definition of that, right? It's alternative data sets that we can use to address ESG problems or questions. And then, of course, with that, you're just subject to all the issues with alternative data that we face into, daily in the team more widely. It's often unstructured. There's low coverage. Licensing is tricky, and all that good stuff. So basically, on both sides of that sort of data landscape, there's just so much to keep us busy.
Okay, fantastic. Thank you, Vincent. Any other unique challenges?
Well, it's just going to supplement what they say. It's like, for me, it's also the same. I think there is a lack of disclosure and standardization among the data. And that leads all data is, as they well said, is the companies tend to lie or greenwash. I think if we will have some proper framework, common framework for all companies to follow properly, I think that will solve many of the problems that we are having, and I think that's the challenge we have.
Fantastic. And Priyank, anything that you'd like to add to the unique challenges?
No, I think the other piece that is here is the data tends to be lagged, estimated. So there, in some places you get a lot of data. Let's talk the common topic that I referred to, emissions. It's available from every data vendor you would want to. However, 60% of some data providers are estimated numbers. So which estimation number do you trust? What number do you trust? So it's not just availability of data. It's also the lag, the timing. They would have different timings of it. And then last, to Tanya's point about having the 360-degree view, is not just what companies have disclosed, but are they actually actioning on this? They have a net zero ambition. Are they actually tracking to that transition path? And are they changing targets? Some of those informations are not easily available, where we use unstructured data like companies' disclosures and apply some machine learning to extract that real intent actions from it.
That's great. Well,
sorry, I'll just lastly close on one point that is also different to this is private assets, which is even more challenging, where you do not have any disclosure, forget the volume or quality. And that's where a different level of innovation is needed, where what do you do if companies cannot disclose or do not disclose, something that we can expand on later on.
Fantastic. Well, I think we've heard a myriad of different unique challenges related to ESG data, right the way from some of the sourcing challenges, but in particular then the linkage challenges and connecting to alternative data sets. Just on that theme, thinking about ESG content, can you explain what methods are used to link ESG content to some of the more traditional data sets within the organization? And Vincent, if I could come to you first on this.
Sure. Well, we use a mixture of tools and internal mappings to be able to link different data providers. With these tools, we pre-process and standardize that data, and then we collect it and present it in a tabular form, and then that database is linked to visualization software, and which is then consumed by the multiple teams across the company, either the investment teams or the stewardship or the risk guys, and that's how we do it. We thought at the beginning that we wanted to have proprietary mappings, let's call it like that, where we started using a small number of companies that we've been increasing over time until we are now in a point that we have a good set of companies able to and that we are able to analyze properly.
Okay, great. Thank you, Vincent. And Tanya, on the same topic of linking information, obviously this is something that you, for all of your customers, is a key issue. Can we get your thoughts on this problem as well?
Yeah, actually, I'll reference a customer without saying their name, of course. But so when it comes to faster adoption of ESG, market participants, of course, they require quality data and technology that can adapt more quickly to all of that change that is happening, and change is the one constant for sure. So one of the most important elements is that ESG content has to make sense and be meaningful. Without it, mistakes are going to be made and fear is going to creep into the industry, and we'll get the kind of discussions about is ESG even helping in terms of alpha and all of these other things. So for one partner of ours, they took a two-step approach. They gathered all the ESG frameworks around globally, and simplified it into a common framework. Then they asked us to map our taxonomy to the common one. So that was simple for us because we're a taxonomy-based technology. But it also seemed to us their approach was a just much kinder way to implement ESG into an investor's day. The next step for us was to transform the ESG content that we're pulling in for them. We have about 10,000 companies that we're tracking right now, and turning it into a score so that those numbers can then communicate with other numbers, such as pricing data. And when you have that score change at the same speed as pricing data, because we use social media as a source, we're able to do that because we're pulling in about 2.5 million data points a day from social media, ESG content related. So you get a very interesting perspective, and also in a lot of cases, some leading indicators. So the best methodology is to stay dynamic. Make sure that you're investing in technology that is as well.
Right. Yeah.
Okay, fantastic. So when I introduced the panel at the start, I mentioned NLP and machine learning, and of course, really that's the heart of the discussion that we want to get to. We understand now a little bit about the challenges and the approaches that your organizations are taking, but we've heard about the scale challenge here in terms of the number of data points that you're having to manage through your processes. So how are techniques like NLP and machine learning being leveraged to fill data gaps, to provide those insights? And also, just related to that, is this being used? Are these techniques being used on both structured and unstructured ESG data? I'd like you all to think about and to answer this question. But Priyank, if I could start with you on this one.
Yeah, I think I touched upon it briefly. It is one of the things that we need to consider is it's not only about volume of data. I'll start with an example where there is actually less data. Something that I alluded to earlier, private assets, where one of the things that we've seen is companies do not have a lot of data or disclosures, and where we have used machine learning to find the closest proxy for the firm by looking at their public sector counterparts, similar size, similar scale, similar number of employees, sector, etc. Develop an ensemble of models, and from there predict the most likely emissions or the most likely waste generated by that firm. And that helps us to give at least a starting point, which then the analysts and the investment teams can opine on, engage with the firm, and get to a closer answer or a better answer. But it helps us to start rather than put a guess number, which is what we were unfortunately having to do before. It also gives us that starting point to engage with the firms, because now when we tell them that this is what we think your emissions are, they are willing to challenge or just have a discussion around that, which I think is crucial in the space. And the second piece is NLP. That is where volume of unstructured data is useful. I've mentioned about a use case around companies discussing about net zero targets, emissions targets. And if you look at multiple big data vendors, they all have a target field in it, which gives you just a number when the target is. But is this the latest target? Is it the 2050 target? Is it 2040? How much progress has it made? What was the starting point? Most of this information is not available. And that's what we scrape through companies' transcripts, annual reports, numerous other disclosures specifically, and train the machine to learn that through the analyst and investment feedback. And that helps us to make that powerful, useful, and customized to our needs. So that's the two contrasting low volume data, but unstructured, high volume, unstructured data examples.
No, that's great to get some of these very specific real life examples as well. Thank you for that, Priyank. Graham, how these techniques are being used.
Yeah, thanks, Mark. I'll happily add a couple more examples. NLP in particular is something that, the company is spending a fair amount of time on within our team and actually across other teams as well. And increasingly personal experience tells me that, it's only gathering momentum. People are becoming, really interested in this, and we get questions, more than ever on it. So, yeah, in a couple of ways we've used it previously. The one area is, again, it's about understanding the climate ambitions of particular companies. And for our use case, it was to define an investment universe, basically, in line with a particular theme that we wanted to launch a product on. And so again, querying the unstructured data, annual reports, sustainability reports, presentations, all that kind of stuff. And just, pulling out the text that gave us that steer on, where they're heading in terms of their climate ambition. This data is then fed to the credit analysts, and they, provide that human overlay to, think about, the false positives, which are also, always an issue in this type of analysis, and whether the company's investable, in addition to that climate ambition. So, and then the security may or may not end up in the products. Another area that's increasingly interesting to people is understanding buzz. So, when I say buzz, it's just how much something's being talked about, and data-wise, we think about different things in that. We think about news feeds and just look at, for example, how often, for argument's sake, carbon emissions are being mentioned in the news or in transcripts, and it gives you a sense of, basically how much is being talked about. And we're also looking at, whether these can be leading indicators or otherwise of some sort of, material event off the back of it. For example, a carbon price increase. So there's loads to do on it, and I think it's a super rich area of analysis. The final thing I'll say on it is, data scientists tend to be sort of quite innovative by nature. We encourage everyone within the team to attack this problem in their own way. So we've built up this real sort of rich set of approaches, techniques that, as I say, the demand is such that we're bringing it all together and really sort of trying to end up with a robust capability around NLP. So yeah.
Great, thank you, Graham, for adding even further context. Vincent, can you talk a little about the techniques and how they're being used within your organization?
Well, it's our data team is a recently new team, but we've been using NLP through data vendors. We specifically use new sentiment analysis for enhancing our current ESG ratings. I believe that it's create an overlay of new sentiment analysis to what we currently have. It can help the performance of the stock and the downside, and also provide the downside risk mitigation on some of the companies that we are following.
Okay, great. So a different approach using vendors to assist with the process, but equally driving at some of the same sort of outcomes.
I think that's because it depends on the size of the company. When you have a bigger company like a Schroders, then it makes sense to create everything in-house. When you have a small company, you need to rely on other teams or the vendors.
Fantastic. And
I mean, sorry, Mark, I was just going to say, I would add, Vincent, that we absolutely do the same. We're open to any, whatever's useful, right? So we combine all of these things to end up with the best outcome. There's some fantastic resources out there, absolutely.
Super.
I agree. I think that's a quite crucial point to mention. Is one of the things that we have discovered more and more is how much we can collaborate across the investment community. There are a lot of these challenges we all are trying to solve ourselves, but they are all standard to some extent. So there is a lot of emerging need for us to collaborate across asset managers, across investment desks as well, which is helping many of these decision making faster and easier.
I think it's a great segue as well into Tanya and solving some of these common challenges. So can you talk to us a little bit about NLP and machine learning as well, Tanya, within your organization?
Yeah, just to follow through what my fellow panelists said is that these partnerships are important, and when I think about that, there's not a lot I can offer that they haven't already said, but just the treating all data as a valuable asset. So some long-standing financial institutions, they have decades of historical data, and once that is made accessible and digestible through AI, it can be transformed into powerful decision-making data sets. We don't have that. We've only been around since 2015. So partnering with an organization, an institution that has decades of data, historical data, is it's a great opportunity. So we all say that, history tends to repeat itself, and finding those patterns, say in a company's culture, as an example, you start to unlock very valuable insights for the investment community. So there's a tremendous amount of data out there through the financial market, and being able to use that to get a good return on your investment, that's a great use of AI and a great way to partner with organizations like ours.
Okay, great, thank you. Related to that, do we see and do you view developing machine learning expertise within the ESG field as a competitive differentiator for firms? Vincent, to you if I can.
Well, it's related to the previous question for me. I think it depends on the size of your company. It's and also the kind of product that you are offering to your client. It will make sense or not. In my opinion, I think it's I prefer to focus on the quality of the data and let other companies to produce the models and NLP. But I think as this technology mature, I think we will be able to have machine learning and NLP models built in-house, and it will be just like using Excel back in the days. That is my opinion, and I think it's where the technology is leading us.
Okay, great. And Tanya, maybe if I could ask you, do you see this as a differentiator, or do you believe it will become a competitive differentiator for firms?
I think I might repeat myself a little bit, but so ESG, of course, is evolving. It's far-reaching, and when you think about it closely, it spans multiple professions. So there's accounting, there's HR, there's legal, there's social. So for one person to be an expert in ESG, it's almost impossible. So having machine learning expertise gives you the ability to integrate that data. Includes a variety of perspectives, and you get to find those patterns with greater accuracy. So being competitive is one aspect, of course. That's what we all want to be. So getting that skill set is important. So is making sure that there's more truth in ESG, and we're better able to identify false claims. So that's where I see machine learning having a crucial role. As we all know, ESG is too big to fail and too important to fail. So the faster we get there, the better.
And Tanya, just while we're related on the topic, do you see risks such as bias, ethics, and some of those privacy concerns related to the data as a major challenge for your organization today? And if so, any thoughts on how we mitigate that?
Yeah, so we prevent bias, I guess, the same way in AI as we do in everyday life. When I look up from my keyboard, I want to make sure that I'm not looking at people who all look and sound the same as me. It's important to have a very diverse team. To go back to your earlier question about competitiveness, that's how you stay competitive in today's world, is through diversity. And that's how you prevent your AI from generating prejudiced outcomes, in my opinion. So ethics, I mean, first, you don't use data that you don't have permission to use, and make sure your vendors are careful as well. Privacy issues, they're only going to get bigger. We have a certain expectation of privacy when we're out in public. We have quite another expectation of privacy in our homes or in our kitchens, in our bedrooms. So devices we rely on are far more intrusive, and I don't expect that to change. So that's going to continue to be a challenge when you're using data. My challenge is to make sure that our data contracts are with platforms that we consider to be trustworthy and have no history of breaches of privacy.
And if anyone else would be interested to give a response related to bias and ethics within machine learning?
Yeah, I'll pick up on specifically the bias. Here is one of the things that many asset managers are privileged with is we have analysts with many decades of experience of understanding and looking at these firms. And one of the things we do is ensure that it's not just a model-driven decision. We get the analyst feedback into the regularly and looking at what seemingly a machine or algorithm is telling you, and having that feedback loop is what differentiates machine learning from any software development, I would say, where you have an input and a set of process and an output. Here you have a continuous improvement, and that makes some of our decision making better and also practical, because this is not a very structured, very organized place as we'll all imagine. So that's something that we are increasingly encouraging and working in collaboration with our investment teams to do.
Great. So human in the loop is still very important within your organization.
Absolutely.
Fantastic. Okay, so really, I think we're coming towards the end now, and I'd like to ask each of you, if I can, one further question, and that's a question related to practical advice. And what advice would you give to others, particularly those who are early in the discovery process using machine learning techniques with ESG data? So just a very quick piece of practical advice. Vincent, if I could start with you, please.
Well, for me, it's focus on what sort of data quality you need and for where you're going to be using the data. Data can be quite expensive and it can need a lot of resources of your company. So if you have a clear mandate and you understand your data or the data you really need, that's where I will focus. Machine learning, it will help, but I think first understanding the data you need is the first step, rather than starting in applying models to your data.
Okay, yeah, that makes great sense. Thank you, Vincent. Priyank.
No, I think it's similar. I think most organizations would say are in a data supported mode. We are not yet data driven, honestly. There is a lot of room for us to move from a data supported to data driven organizations, and hence machine learning is one of the great techniques. It's not the only place. So we would always encourage to start simple, start small, experiment a lot, be brave to try a few things, and there will be lots of failures. But that's the part of the journey. That's what we've done, is keep it simple as much as possible.
Okay, great. And Tanya.
I would say, based on my experience, to ask for help. I think the best always do. There's always someone who struggled with the exact problem and they found an answer in a forum, most likely, and good luck.
And finally, Graham.
Yeah, I mean, I would also wish them luck, and I would say, get comfortable internally with what you think sustainability is. There's no universal definition, and off the back of that, get comfortable with what you're trying to achieve data wise, and get very focused on that, and also learn from others. There's so many people looking at this now that if you're starting out, the last thing you want to do is reinvent the wheel, often not as well as someone else has done it previously. So be very scan that horizon thoroughly and just see that you're not repeating something that someone's already done.
Okay, fantastic. Well, thank you all. Some great advice there. Understanding your data needs, be brave, experiment, start small. Don't be afraid to make some mistakes. Ask for help, learn from others, and focus on what you want to achieve through the process. So I'm really grateful to the panel for some fantastic insights today, for sharing some very practical examples and some real life examples that are happening within your organizations. That brings us to the end and to the close of today's discussion. So I'm now going to hand back to Andrew, and we look forward to taking questions from the audience. Thank you.
Thank you, Mark. And yes, I agree. Some fabulous insight there in terms of practical examples. I thought that was a really great session. Lots to let me see. Go to in the Q&A. I'd like to remind everyone to complete their probably the first time. Feedback's very important to us, so please do get those forms in, please, and that will allow us to understand more about what you would like to hear from future events. So I'm going to hand back to Mark now to run the final audience questions. Thanks, Mark.
Fantastic. Thank you, Andrew. Okay, so we've got some great questions in on Slido. I think we have 6 questions at the moment, and I'm going to start with the first question, which has been voted for 4 times, which is, how do you identify and select the best external services for your needs in an environment with little standardization and mixed data service provision? Would anyone like to take that question?
Happy to give it a go.
Brilliant. Thank you.
Yeah. So I think that it's not a straightforward answer, of course. The 3 things to be considered typically would be coverage, quality, and history. How far back in history do we get? And you got to be a bit more opening the hood sometimes with many of these data sets. Generally, we start with what are we looking for, what kind of data we're looking for, and then experiment a bit with actually. And then the second piece is also what gets underestimated is the technological infrastructure that is needed to bring those in. And the last point that is crucial is how does it tie up with other data that we continue to use? That ends up to be a fairly big challenge, because marrying 2 data sets is not as straightforward, and it gets even more complex with ESG, given things like issuer mappings and aggregating data sets. So that would be just the summary of my answer. Would be start small, experiment with it, go into a bit of detail before you sign the check.
Great, thanks, Priyank. Vincent or Graham, do you have any further thoughts on how best to identify external services?
I think for me would be to match what are the requirements for your investment thesis and see if the data provider contained enough sufficient data to go for it. I think there is very important input from the fund managers and analysts that will use that data and see if it is relevant, because maybe what I think I will consider or the analysis that I provide is not what the analyst or the fund manager will see. So it's very important that you work very closely with your investment team in order to understand the requirements.
Mark, I can jump in on that actually, if that's okay. Yeah. I think sort of slightly turning it on its head, I guess I'm going to highlight why sometimes it's so difficult to find a compelling service provision outside of the firm. And if you can get around some of these obstacles, then by default they become the most reasonable option. So I mean, as we know, ESG data, beyond the fact that it's not universally defined, it's esoteric. Some of it's very esoteric, and therefore, you get these fantastic, data sets or seemingly fantastic data sets, but there's no way to validate them. And we've had some really fascinating conversations with data providers where, they seem to have this silver bullet in terms of a data set. You get into the weeds on it, and in one particular case, we got asked to verify their data set. They said, can you verify it, and then use it? And it was sort of like, well, you really need to be sort of, convincing us to buy the data, and it wasn't an insignificant sum. So if you can find people who can tell, a good story and give you that validation, then often they kind of rise to the top as people who you would select.
Okay, that's great. Thank you all for that. And actually, related to that topic of validation of the content, as you start to look at content quality, we've got a couple of questions here which I think are related. A question from Elizabeth says, someone said that companies provide false data and reflected on that a framework would solve that? Do you think a framework needs to be followed up to make sure that the answers are correct? And there's another question here, which actually Tanya has specifically called your name out. It says, question for Tanya. How do you manage fake news or misinformation? I think both of those are dealing with the same concept of data accuracy. Would anyone like to take those?
I can take the second one.
Great, thank you.
And so how we deal with fake news is that we deal with it the same way the CIA does. We believe it's true until it's no longer true. And that's called a contingent truth. The reason why we've decided to do it that way is that until society calls it out as fake news, it's still moving markets. So we don't want to exclude it until society has excluded it. The other thing, I think, if we want to really get into false data, one of the issues with company disclosures is, of course, that the majority of it is being called out, definitely by the EU as being false or misleading or not providing enough data. So that in itself is an issue, as well as, using social media. But at least with us, we find that we are able to generate that ESG story on a regular basis, or we're able to follow it more closely and be able to determine when fake news is being called out and being able to show that with our customers.
Great, thank you, Tanya. Anyone else have anything to add to the question around fake news and indeed how you ensure that answers provided are correct? Okay, I'll jump on to the next question. So the next question is, you talk about collaboration on ESG challenges across the industry. How could this get started and how could it work? So any thoughts on that? Has anyone seen examples of good collaboration already, or some ideas on how that might begin?
I can start it off very quickly. I think lean on the trade associations where possible. So taking the UK, for example, the Investment Association are obviously the collective voice of the industry. And if there's a particular issue that we'd like to push forward as a group of asset managers or, asset managers or otherwise, they're absolutely the kind of focal point of that. And in particular for smaller firms who don't maybe have the resources to do that kind of thing themselves. So yeah, I know they're engaging on certain issues around ESG already. So yeah, that would be a recommendation.
Thank you, Graham. Any other thoughts on industry collaboration and how the industry can work together on some of these ESG challenges?
Yeah, I'll go with it. I think there is the challenges also around some of the infrastructure technology as well, with data providers themselves needing help. So one of the things that we have been doing is having a tri-party agreements or partnership as such with Microsoft, for example, and help our data providers to upsell on their infrastructure or share some best practices, even with some smaller organizations that have some fantastic data sets. How could we help them and how could we share some best practices? So it's not only our peers, but it's also wider influence that can be possible, and there is some really good stuff happening with companies already doing that and willing to come forward and share.
Fantastic. So that's collaboration for the smaller providers with some of the larger providers that are more embedded within firms. Fantastic. Okay. Anything else to add on that question? Any other points to add? I know for the data management professionals that the EDM Council also have been focusing on some of the ESG working groups and more recently to try and support the community in that space as well. Okay, next question. What is your experience with working with off-the-shelf ESG solutions? Do you find that metrics can at times be frustratingly inaccurate or wrong? And if so, how do you get around this? Would anyone like to take that question?
I'm happy to jump in there as well, not least because I've literally come off a call talking about this in Schroders. So yeah, I mean, there's lots of things that are wrong in these systems. So as I said on the panel earlier, that the column headers are fantastic, but they're often empty and sometimes wrong. So we do find this, absolutely. We've been thinking about ways to, if something's blatantly wrong, we're putting in a system whereby we can override it, so that we know the data going into our models is correct, as far as we know. And I think, there's things that are just outright wrong, like by an order of magnitude of 10 or whatever. But there's also where our analysts or our sort of sector experts or company experts just have a different view. And actually, we consider their view to be the expert view. They spend, their full-time job looking at potentially a sector of these companies. So yeah, it's not just wrong data, but actually ingesting better data based on, our internal research.
Yeah, I think one thing I would add there is also in the space you potentially need a 360-degree view. So you do need to have a combination of data sets to give you an idea of what is closest or what is good enough. It may not be the best, but there is things like emissions you will have from every data provider. Only when you go into the detail, you would see that there would be some who are very good in certain asset classes. As a specific example, that's one is looking at contrasting against data providers does help. And then the second one is also going a bit to the qualitative feedback view, which I think Graham was touching upon as well. We use a lot of that to ensure that the numbers are also tie up to what we see in reality with the organization and what they're doing.
Okay, great. Thank you, Priyank. Moving on to the next question, we've got an anonymous question which is related to greenwashing. So the question is, Tarek Fancy, formerly CIO at BlackRock, has opined that the whole of impact investing is greenwashing. Can you comment? Would anyone like to take that slightly controversial question?
I can speak to that. I think I would say that there is a lot of virtue signaling, like I said in my comments previously, that ESG is hard. So we don't want to show society that we're not virtuous. So we tend to lie or be purposely vague. But I think it's up to society to call these companies out for that. I do know that when we are upset or frustrated with something, we talk to each other about it. And then we go to social media, then we go to our government representatives, and then it lands at the door of regulators. So I think we're close to the point where it's going to be at the door of regulators in a bigger way, and it will be up to them to make it stronger, so that we can't do the virtue signaling that we're doing currently, or the greenwashing or woke washing that we're doing right now.
Can I add to that, Mark?
Please, yeah.
So I think people do it for different reasons, right? The commercial pressure or opportunity is clear. I was looking at some data the other day. I think ESG thematic funds, as sort of sectorized by one particular provider, had grown by about 160% in terms of AUM over the last 18 months. Now, obviously low base, good performance, but absolutely inflows driving some of that as well. So I think people will be, absolutely getting on the bandwagon. But I think at the same time, and without getting sort of misty-eyed about it, there are people who actually want to do some good, with people and planet. And I think let's just keep that in mind, not be too cynical about the whole thing. And I think as asset managers as well, we're in a really sort of privileged position to be able to make a difference, because if the companies that we invest in, get the signal that we want them to change their practices or we might not allocate, absolutely, we're in a fantastic position to make a difference. So I think, there's two sides of the fence. I'm not saying it's, greenwashing doesn't exist, but it's unfair to say the entire, ESG landscape impact investing is greenwashing, because it's not.
Okay, fantastic. Thank you both for that. And the final question from Patricia is, last year was not typical to measure ESG data with remote working, less commutes, limited foreign travel. How can companies present real ESG data in future without being impacted by the reality of the new normal when economies recover? So any thoughts on that last question? And indeed, have you seen a difference in your own data sets? Have you seen information last year following different patterns to information in prior years? Is that something that you've noticed within the data?
One thing I would say is that I did notice that pre-COVID, there was a strong focus on environmental data. We were heavily focused on climate change and all of the actions that are attributed to that. Since then, since COVID, I noticed that the social needs of our society have increased significantly, and the data around that has expanded. So I would say that the social side of ESG is becoming more aligned with the environmental focus.
Interesting. Thank you. Any further insights on that question or on that point?
Yeah, I think there's a comment I would make is we track around a few hundred metrics that companies disclose, and we've seen the volume of that go from 1 million data points just a decade ago to about 12 million for the same. So as the volume of the time series information here is crucial, so we'll have many such ups and peaks and troughs with data and information, and this is one of the reasons why this is fairly qualitative and quantitative space. So that's what we have to sort of take in account, that this is not going to be the trend just based on what is happening last year. It's going to be, it may or may not persist in the same way.
Okay, fantastic. Thank you, Priyank. Any other responses to this final question? Okay, then we'll wrap up there. Thank you very much once again to the speakers for your insights on the panel and also for responses to the questions. And now, Andrew, I'd like to hand back to you.
Thank you, Mark. Thanks to all our great panelists. That was an excellent session there. I have to say that of all these online virtual events that we've done over the past 20 months or so, we've probably had more questions on Slido today than we've had any. So clearly this is a topic of interest. That's very encouraging for us, and I should probably point out that we'll be continuing these ESG conversations with a new ESG Data and Tech Summit that we will be running as a hybrid event in April of next year. So hopefully we'll have some actual physical interaction in the form of people in the same room actually speaking to each other and rubbing shoulders and all that kind of stuff. Fingers crossed that we get to that point. You can, however, go and sign up to attend that through our website. So if you're interested, it's up there, go sign up. A couple of points of housekeeping before I leave, just to demonstrate that I can be just as irritating in a virtual format as I am in real life. I'm going to hound you one last time to complete the delicate feedback forms. Regulars at our events know that this is one of my personal bugbears. We love your feedback, so please do fill out the form. Helps us shape events going forward. If you have missed any sessions from today, they will be available on demand for a limited time, so you can go back and check out these great sessions that we've done. And finally, I'd just like to thank all of our speakers and moderators, and of course our sponsors, Adenza, Solidatus, and Six, without whose support these events wouldn't be happening. So thanks to the sponsors, thanks for everyone for attending, and with that, I'll wish you adieu till next time. Bye-bye.